or afternoon to you, and welcome to the Tuesday edition of Unplugged with Mark A. and Bill. My name is Bill Corcoran. I'll be your instructor, your guide, your host, your fellow student as we move forward on educating ourselves in all things stock and options market related. I want to thank you guys for coming in and spending some time here. Joseph, how are you? Joseph saying good afternoon. Lou, how are you again? And Lou reporting that the sound is good, which is outstanding. Guys, this is a little presentation that Mark and I do every Tuesday. We get together with you guys, hang out, spend some time in the middle of the day when not a whole lot is going on. And let's see. Getting a text message from my son who's serving overseas, so I'm going to take that here real quick. And there we go. All right. So appreciate you guys coming in, spending a little bit of time here with us. And as we, thank you, Mike. I appreciate that. I will pass that on. Spend a little bit of time talking about learning about observing and actually practice trading in the stock market. And that is our goal. That is what we're here to do. That's what we're going to seek to do while we spend some time here with you guys. Understand that neither Mark or I are registered broker-dealers. We do not have license to give you specific financial advice, and that is not what we're here to do. I will mention that I consider certain securities or positions to be good candidates for the types of strategies we're discussing or illustrating, but because I consider them appropriate to the discussion or for illustration does not mean that I am telling you to trade any strategy or security, meaning that nothing that I am telling you is investment or trading advice of any kind. That's not what I'm here to do. I'm a teacher and educator and coach. I'm here to teach, educate, and coach. My job is to share information with you, to guide you down the process of learning how to trade in the stock market and not to tell you what to trade in the stock market. Understand that part of that I will use examples of real-time unfunded paper trades as a way to highlight, illustrate, and demonstrate the strategies that I'm doing. And I want you to understand that neither of us have any trading restrictions, therefore we could initiate a position at any time. All right, let's see. Thank you, Kathy. I appreciate that. Kathy saying thank you for serving and keeping us safe. I appreciate it. He's been on deployment here for a little bit, and he's serving with some special operations folks, so he is in an undisclosed location. Let's put that. Summer school, Brenda. Brenda, give me your number, and I'll contact you immediately after this. All right, let's see. Joseph says, just thought you might want to consider removing the canceled over TSS on the ruling news feed. When I saw it yesterday, I thought the whole event was canceled. Later on, I found not only the name was canceled, and thanks to your site. So Joseph talking about, how many of you guys have been to our website? Right? I mean, you guys had to get there to get here, did you not? Yeah, so those of you that have been there, right, you may not have even noticed, right, what Joseph is talking about there. What he's talking about is the banner that's going to come up here in just a minute. In case you guys didn't know, we're on YouTube. All right, so we're there. There it is right there. Okay, it says Trader Super Summit canceled. And Joseph says you might want to remove that because it made me look at it. It's kind of the point of the whole thing, right? Let me tell you guys how that came about. We had some people call up, some of our students who we, at this company, we try to do everything that you guys, want to do. We try to make ourselves very student-centric in our teaching and what we provide. And we had some students actually call us up on some emails that we sent out, and they said, I'm not going to Super Summit because it's going to be the same old stuff, right? I'm going to learn the same thing from the same instructors that I did last time, and therefore I can't learn anything new, which at first I'll admit straight up kind of ticked me off, because I was like, are you kidding me? I travel all over the country with Marquet, going to workshops and teaching events, and I learn something from her every time she teaches, and I've been a student of hers for 10 years. So how in the world are you friggin' going to tell me you're not going to learn something new if you go to an event with 5 or 6 trading instructors teaching the material? If you're that good, you all need to give me a call, show me your trading records, because I'll give you a job teaching, right? So, yeah, exactly. Patty says, then don't go if you already know everything, right? No, well, go as an instructor. All right, so, I mean, if you're that freaking good that you don't need to go because you think there ain't nothing for you to learn, give me a call. I'll take a look at your trading records, and we'll see if you really are that good, and maybe you need to be teaching this stuff. Okay, Bill says, I've been to many next steps and always pick up something new. Brenda says, I learned something just attending the classes. So, yeah, it was, so my first reaction, being the personality type that I am, was that I was a little offended and irritated. I'll be honest with you. I mean, it kind of, frankly, just pissed me off. So I said, all right, I need to back off of that, and let's take a look. What is it the students are trying to tell us? And what they're trying to tell us is, look, we want something new. We want something different. We want something that has a different feel, a different look, a different sense to it. So we went out and we canceled the Trader Super Summit, changed some of the reservations, some of the rooms, and we put on an entirely new event that is not the Super Summit, right? It's called the Success Symposium. So the Success Symposium is stock market and more. And here you go. We changed the name. We didn't just change the name, all right? New speakers, new material, new strategies, a new feel. Here's some of the stuff that we got going on. I'm going to be bringing out somebody who is one of the most inspirational people I've ever met to keep you guys motivated, excited, and moving forward, to get you to stop thinking about quitting and start thinking about winning. And we've got some other folks coming out. In fact, one of the people that is going to be coming to that event is well, effectively a student, right, who has shown me trading records that astonish and just literally blew me away. And I asked him, he's a good friend of mine, and I said, would you come and speak about trading a small account? Because you kind of got it going on here. So we got new speakers coming out. We got a new feel for it. It's going to be more than just trading. But its focus is, of course, success. And so we took the entire idea of Trader Super Summit and we said, let's toss that aside and let's come up with a new idea that is something that is going to keep you guys engaged, entertained, motivated, excited, and learning new material. So it is a brand new form. We're going to have a trading contest, right? Paper trading contest, but it's going to be a trading contest. We're going to see which one of you guys really does have it going on, right? Who are my trained killer paper traders out there, right? So you need to get to this event. It's going to be unlike anything you guys have seen before. I've seen some of the presentations that are being put out there. New stuff, right? Stuff that most of you have never seen. And for those of you that have seen, for example, how many of you guys already have Marquet's Trend-Setting Trades DVD set? John says, can we start early? How freaking early do you want to start, John? I'll be there. It's not Vegas, so it's not like I'll be coming in off of the floor, off the card tables, right? So you tell me. John says today. Okay. I got you excited, huh? So, yeah, we'll start today, all right? Tomorrow. How about that? We'll start tomorrow. Guys, it's going to be an awesome, awesome set of coaches and information, and we've got a networking session set up, unlike anything we've ever done before, on one of the nights, where you're going to have an opportunity not just to network with the coaches, but with other students. And we're going to encourage that networking to build relationships, to build accountability partners. It's going to be an awesome event. Here's the thing. Stop with the excuses, okay? And when one of us calls, and I'll tell you right now, the reason I asked about Marquet's DVDs, how many of you got them, and I'm waiting for the count here. Looks like half a dozen or so. Y'all need to step it up, right? So you're going to be getting some phone calls from me on things like Success Symposium and Marquet's new DVD set. I'm actually blowing up the phones myself, reaching out to students, and if you tell me I'm not going because it's going to be the same stuff, you're going to hear me count to 10 silently before I answer you, all right? Because that answer just ticks me off. Like I said, if you're that freaking good, let me know, okay? Because I'll put you up on the stage if you think you know it all already and you prove it to me, right? So let's see here. Kathy says, where and when? Where and when are we doing this Success Symposium? So here's the deal on the Success Symposium. May 19th and 20th. So let me do this. Let me just get out of this altogether. There you go. May 19th and 20th, Gaylord Palms in Orlando, Florida. It's going to be hosted by BetterTrades. That doesn't necessarily mean May 19, 2021. Yeah, thank you, Victor. 19, 20, 21. So, boom, there it is. All right, now I don't normally like to start out with, you know, something like that. I mean, we're here because we want to check out the markets, right? And I'm looking at the markets in the background. I don't know if you guys, I don't think Marquet and I have ever done this. Those of you that are in the lab, you know that from time to time I have been known to do a little something like this. There I am, right here hanging out with you guys. Look, T-shirt 2015 Wild West 3-gun championship that I shot. Here's what's going on in the background. Look, right there. See? That's it. Okay, that's enough of that. Nobody needs to see more of that. So I'm watching what's going on in the background, right, and seeing what's happening. And you know, like I said, when we join you guys here for this this little deal that we do on Tuesdays, it's I mean, we're literally just hanging out, talking to you guys, right, watching what's going on in the markets. Some of you guys noticing some stuff. Google, nice little bounce here off of the 10 moving average. The problem with Google is they've been up now 1, 2, 3. Really, you know, if we trade higher, today's day 4 of a move above the 50 moving average. But if you count all the days, 1, 2, 3, 4, 5, today would be day 6. A little bit worried about taking a position on something like that, right? How many of you guys would agree with me? Day count's a little bit long there. You look at something like an Amazon, though. Amazon is in day 2 above the 50 moving average. We're right at yesterday's closing price, and buyers seem to be getting attracted into something like this. Brian says I had a completely different image of you in my head. Well, did I ruin it? Right? You thought I was sitting here in a 3-piece suit or something? I mean, hello. I'm chilling out, relaxing with you guys. All right, there you go. There's look around my office. You see some of the cool stuff. There's the bookshelf, the well-known bookshelf. Give you guys a chance to. All right, nobody needs to see that. All right, put on a tie and a T-shirt, Mike says, right? Okay, Joan says, I have Marquet's new DVDs. When are the other DVDs? John and the Air is being released. Joan, my DVD set, the Calendar Cash Flow, which I'm going to talk a little bit about some of the strategies in there, is out. Let's see. In fact, they got it all loaded up onto the cloud, and now we're pulling it down off the cloud. It's quite a process, actually. And converting some of the files and whatnot to be able to cut them onto the DVD. So I'm going to say that my DVDs will be out and on sale at the full retail price by, I'm going to hope, the end of this week. So if you all are thinking of getting involved in those and you want to get the pre-sale price, best event price you're going to get is $12.95. That's at a live event. Retail price is $19.95. And if you pull the trigger now, it's going to be $9.95. Okay, so $9.95. I'm getting quite the interesting reaction on my whole video camera. I'd take you guys for a tour around this place sometime. So there you go, Joan. So those should be out here. And Joan, I think you pre-purchased, right? Yes, Kathy, I would agree with you 100%. Kathy says maybe they'd rather see your wife. She's a lot prettier. Yes, she is. She's gorgeous. For those of you who have never met my wife, she is a stunner. Definitely married above my my class. All right, married up. All right. Jose says, will we next thing? Will we be in a classroom like in the old days? You talking about at the Success Symposium, Jose? we're looking at different ways of doing that, actually. Looking at maybe some smaller breakout rooms or, kind of a different setup altogether, right? So some of it will likely be classroom type stuff. All right, one that I've been watching here this morning, guys, through the morning, and we kind of watched this one this morning, was the breakaway gap on Apple. So Apple, yesterday, we got into a little position on Apple. Stock was bouncing off the 5-moving average, started to rally, and then you get this breakaway gap. Now, what is a breakaway gap? My definition of a breakaway gap is when you have a consolidated and then you have a gap that breaks away from that consolidation area and does not fill. This is a bullish move on Apple. This is a significant move, a significant event. You can see how the stock was basically, had broken out to a high, did it in 4 days. How often do we see that, right? I mean, stocks move for 3 to 5 days, and then they tend to pull back. And we went into this consolidation period right here and then started trading above the 5-moving average. So that consolidation right here with the move above the 5 was a big clue. Today's breakaway, Victor says, is good for $1,700 overnight trade. Congratulations, well done. And just make sure that you defend the gap, as Marquet teaches in her trend trading DVD and does a phenomenal job of illustrating that and adding to that in her trend setting DVDs. Guys, if you have not, let me put it this way. If you have Marquet's trend trading DVDs, you've been watching those, you've learned stuff from those, you have to get her trend setting trades DVD set. Man, I mean, she took it to a whole nother level. And in talking to students around the country at live events, I keep hearing the same thing, and that is that something about this event that she did in Phoenix was so much clearer to me, or I got so much more out of it, or I just, the foundation was laid in trend trading, and now the trend setting just really set me on a whole nother path. Get that DVD set. Some of you will probably be getting a phone call from me and others I mean, we're literally putting on a big push there and making phone calls. If you would like, well, I'll just let you in on a little secret. If you answer the phone when we call and you decide to pick up Marquet's DVD set, there's going to be a little extra in there for you, right? A little something extra, a little bonus. And so we'll talk about that. If you would like me to call you, let me know. Leave me your number. I'll freaking give you a call. I mean, I'm blowing up the phones today, tomorrow, all week, and reaching out to some people, and some of y'all I'm going to be like, where have you been? All right, so there you go. Brenda says, Apple looks like a J-hook all the way up to the 200 moving average. So the J-hook, right, or what does Rob call it? Like an H, right? He says it's an upside down H pattern, right? There's that H pattern. Some people will call that a version of a cup and handle pattern. Whatever you want to call it, here's the deal. This is bullish, right? So if it's bullish, what kind of options can we buy on a bullish stock? Right? We would buy call options. Well, the problem is if you did not buy your call options yesterday, right? So let's do this. Let's just play this all the way back. Love this about the eSignal platform. We have a big engagement campaign going on eSignal right now. So if you don't have it yet, you better get it. All right, so we've got, I love this about eSignal. I can play back to any 5-minute candlestick that I want and replay the entire day. This was yesterday at the open. This is actually where we started looking for an entry here and said if we break above the high of the previous day, we would get in. Oh, there we go. There it was right there. There was your entry. And we stayed with this trade throughout yesterday, right? And Victor said, it was worth a nice little profit there. Our stop was below the low of the day. And so, just kind of hung in there through this thing. But if you did not get in yesterday and ride through all of this, then this morning, are you going to get in now? Right? Because you're like, well, crap, this thing's gone too far at this point. How many of you ever looked at something like this and you're like, well, I can't get it now. It's gone too far. Shirley, don't even get me going on the FBI and the whole Apple thing. I think Apple's going to dig in their heels And quite frankly, I think there's still enough Americans in the judicial system who will believe in the Constitution that the FBI is going to get told to pound sand, but that's just my personal opinion. So a couple of you saying, yes, I've had ones go, I've had stocks go like this and gap, and I don't get in, right? Because you think, well, this thing's gone too far. And it's happened to me where I don't get in the trade, it's gone too far. Well, now go look at, so this was this morning, right? And obviously there's no entry to the trade this morning, like right there, or right there. Nice pullback entry there, right? I mean, so this went on all morning. We bring it current, and we see that, well, crap. You know, if you didn't get in yesterday, you had one or two possible entries first thing this morning, but then, you know, now it really has gone too far, has it not? How many of you would feel like something like this is like, well, you know, forget it. It's gone too far. I'm going to wait for a pullback to the moving average. You certainly could. But what's going on in the stock right now? What is it doing, like right this very second? Second candlestick would have been a good entry. Mike says, yeah, here's the deal, guys. That second candlestick entry this morning was awesome, right here, right? Now, the concern obviously is, oh my God, what if it comes in and fills the gap? Well, you just put your stop down in the gap, right? So if it does, then you just get out of the trade. But what is the stock doing right now? It's in a Bollinger Band squeeze play, which is something that Marquet teaches us, and it is one of my favorite plays. Well, guys, that just means that price activity has basically balanced out. Price discovery has balanced out, and there are as aggressive buyers as there are aggressive sellers, right? Stock price is just staying in a very, very tight, narrow range. And if it can break out from here, we have a potential trade. Either way. So if the stock starts to break out and move above the upper Bollinger Band, that is a tradable event for us. If it starts to break out and go below the lower Bollinger Band, it's a tradable event, more of a day trade, if you will. Okay? Super squeeze play, Jordan says, because it's actually inside the Keltners as well. Right? So, I mean, it is squeezed so tight that it's actually inside. So those of you who trade with Marquet's Keltner bands, right? A DVD set that she put together, and actually, you know, she's not in here right now, so let me ask you this. How many of you would be interested in Marquet teaching a one-day class on Keltner? Live one-day class on Keltner. Okay, so what Jordan's talking about there, the Keltners, what if we combined Keltners and Bollinger Bands and taught a one-day class in, oh, I don't know, say Las Vegas? Scott says on, or Brenda says online. Okay, I'm talking about in person. So you could see, guys, I'm telling you, the people that went to the Phoenix event and saw Marquet teach in person were just blown away with it. I mean, there is such a difference when you can see the expressions, the face, the emphasis. It is awesome. Okay? So Mike says, like that idea. Demetrius says, with an intraday focus. Yeah, here's the thing, Demetrius, you can use Keltners and Bollinger Bands on intraday as well as daily charts for swing trades and trend trades. One of my favorite plays is a Bollinger Band or a super squeeze play on the daily chart, because the moves that you get out of that are massive moves. So the focus would be, how about the focus is on trading? Because, guys, when it comes down to it, doesn't matter if you're trading intraday or trend trading. The chart is the chart is the chart. And if you can trade intraday, you can trade swing and trend trade. Okay? Joseph says, how about a location that's centrally located? You mean like Las Vegas? Because Las Vegas is centrally located. And it's fun, all right? I mean, what am I going to put it, like in Minneapolis, for crying out loud? Are you freaking kidding me? Why don't we go somewhere fun, Joseph? Let's go hang out, play cards, right? I mean, So here's what I'm looking at trying to get Marquet to agree to do, guys. I am doing a live 2-day Ultimate Options Trader workshop in Las Vegas. That is coming up in May. I believe that's right. Is that right? Well, let's go look. So we're looking at trying to do a joint class there where I would do a 2-day class and Marquet would do a 1-day class. And there it is right there, Ultimate Options Trader Live. And that's going to be on, I'm sorry, April 13th through the 15th. And I'm going to see if I can get Marquet to come out for a 1-day class right before that. All right, so there you go. Opportunity for you to kind of check that out. So when you've got a stock that's in a squeeze play like this or a stock that's in a super squeeze like this, there are ways that we play this. To me, this squeeze play gives me an opportunity to do a couple pretty cool things. How many of you guys would like to see one of the risk management strategies that I've been teaching now at our live events? Haven't taught it very much. I've taught it at a couple of live events, and is one of the strategies that my friend Dean, who's going to be teaching small account trading and risk management at the Trader Super Summit, uses to manage trades like this when, for example, you've got a nice profit built in from yesterday. Victor, you said that nice profit from yesterday to today. How many of you guys would like to see a kind of Kearney, Nebraska? Really, you want me to put it in Kearney, Nebraska? St. Louis. St. Louis is okay. I mean, they got beer, but it's not Vegas. Of course we're going to do it in Vegas. All right. So how many of you guys would like to see something that I've taught a couple times that I think is one of the most powerful and underused strategies in the options trading world that can reduce your risk and enhance your profit when you get something like this breakaway gap if you were in it from yesterday to today. And I actually did not teach this morning in lab. So those of you that are members of the lab, this is new information also. Awesome. I will give you a call, Beth. I think I actually have yours anyway. So I will call Beth. She is interested in the new DVD set and the offer that we're going to make there. And any of the rest of y'all are, let me know, and I'm going to reach out to you. All right. So here, let's go in and let's take a look. Let's say that yesterday you went in and you purchased some call options on Apple, and let's say you got in fairly early in the day, stock's trading at 102, and you were able to go in and buy the 101 call option for about $2. Now there's a reason that I'm using those numbers. I know they work. Let's do this. Let's erase all of this. This was a discussion we had this morning on dynamic hedging. Kind of a cool idea. So stock's trading at 102, right? And it looks like it might be bullish. It's bouncing from support. You go in and you buy to open the 101 call option for about $2. Okay, so there you go. You're buying that option for $2. You're now in a bullish position. Okay, stock kind of goes up, down, sideways, and ends up at the end of the day, and I don't remember exactly where we ended up at the end of the day yesterday, 102.67. So it went up a little bit, right? Started out the day about 101.85, 102.67 is where it closed. So at the end of the day, you're basically in the same place. But the next day, the stock gaps up at the open to about 104, if I remember correctly. So the stock has gapped up to about, right at 104, and then rallies to about 105, and it goes into a Bollinger Band pinch or a Bollinger Band squeeze at that point. So the stock the next day trading at 105, okay, and then it goes just sideways. Well, do you have some profit built into your 101 call option, yes or yes? How much is the call option going to be worth now? Your 101 call is going to be worth how much? Now, let me ask you different. How much intrinsic value is in this call option? Yeah, $4 plus whatever time value is in there. So it actually ended up being worth a little better than $5 at one point today. Okay, a little better than $5 at one point today. All right, well, that's exciting, isn't it? Your option went from one day to the next from $2 to $5 in one day. How many of you would get excited about that? Now, again, I'm using examples, and the numbers may not be exact, but that's definitely right there in the ballpark of where you're going to be. Okay? Some of you saying I would be, and I love this. Some of you saying I am. All right? So that tells me what's going on there. So here's the deal. You now have an option that's worth $5.20. Let's go in and let's just assume that you had an account that was big enough and you were managing risk that you were able to buy 10 contracts, and this morning you still had 10 contracts in the game, right? So you've got 10 contracts in the game. Well, what should I do? Could I move my stop up? Would that be one way to manage my risk? I mean, you just look at the chart, okay? Could I move up my stop? Yeah. Okay, so I could move up my stop. That would be one risk management technique. How about this, though? What if as the stock started to go sideways and went into this Bollinger Band squeeze play, I just sold my option? What if I just sold it? What if I took this and I just got rid of it? Sold it. Gone. How much money would I make? If I sell it, I would make, Denise says, that does not sound like you. What are you doing? You're just selling this thing. I am. Watch. Here goes. Ready? Pow! It's gone. Oh, my God, Bill, what have you done? There was no technical reason for you to sell that and put $3.20 of profit in the bank, or $3,200 of profit in the bank. I just put $3,200 in the bank, did I not? That's $3,200 of profit that just went in the bank. Well, that's fine, but the stock is still bullish. $3,200 minus 2,000 would be $3,200, right? Okay, so Jordan, it would be 2,200 if we're using the numbers that you're talking about, which is fine. I'm using these for example only. Remember that? I think we even had a disclaimer about it. So your 410 would leave you with what? $2,100 of profit overnight on 10 contracts. Still works, and it still works for what I'm going to show you. In the money was 4, not 3, so you would be $4 in the money. Okay, you own the 105 call option. I'm sorry, you own the 101 call option, right? That's the option that you own, and the stock is trading at 105, which is going to leave you with how much intrinsic value? Yeah, you would have $4 of intrinsic value. Okay, so I've got an option that was $5.10, $4 of intrinsic value, $1.20 of time value, and I sell it. Okay, but the stock is still bullish, is it not? Is this not still a bullish chart? Did I not say, hey, this freaking thing's got a breakaway gap. This thing is likely to continue moving. Yes? How many of you would agree that the stock still looks bullish and we still want to be exposed to this bullish stock, let's not be foolish and get out too early. All right. Let's go in and let's just take a look at something here. Let's just say, for the sake of argument, that we might consider getting back into the stock if it breaks above this upper Bollinger Band later this afternoon at 105, since it's in a Bollinger Band super squeeze. And we want to buy, you know what? Let's buy the 104 call option in the money, 65 delta for $1.42. Okay, $1.42. So to get into a new position right now, and it's going to be a little bit higher than that because it's 10 cents higher to hit that, let's call it $1.50. Okay? If the stock starts to break out this afternoon, I go in and I buy to open the 104 call option for $1.50, and I buy 10 contracts. How much will that cost me? That will cost me $1,500. Yes, I will have to spend $1,500 to buy that. Right? Well, I'm not really spending the money though, am I? Where'd that $1,500 come from? It came from my $3,200 of profit. So if I do this, if I roll up the option chain, which is something that I'm going to be talking about in a class that I've got coming up here, guys, on expiration. It's an expiration-only class. I'll tell you guys about it here in just a minute. But if I roll up the chain within the same time frame, I'm not rolling out, I'm just rolling up in this case, I am reducing my risk and potentially increasing my leverage. I'll show you that in a minute. Aaron, I will give you a call. Aaron's saying that he is also interested in the DVDs. So let me give Aaron a call here. Give me just a second, Aaron. Let me get your information down. Aaron, sounds like you might be in my area, right? Is that your... I'm in the Houston area. Kind of cool. Yeah. Oh, all right. Awesome. Cool. I mean, you just had it up. Excellent. Excellent. I will give you a call. We'll get you taken care of. All right. Now, Mike wants to call too. All right. Mike, all you guys are like, well, as long as Bill's calling, let's hang out and talk to Bill. All right. Hang on a minute. We got Aaron. I got Beth. I got Mike. And Bruce is also, all right. I'm just going to call everybody who went to class today. How's that sound? Don't think I won't. All right. So back to my strategy. I got a really cool strategy here, right? So I've got a situation here where, guys, look, if I make a profit like we did overnight, it just makes sense to roll up the option chain because I can get into another call option, have the exposure to bullish exposure to Apple for call options. But even if I trade this new position with no stop at all, and all $1,500 was to go away because the stock just plummets from here and it goes away, will I be crying in my Cheerios over my Apple trade? No, I'm not going to be crying in my Cheerios. Why not? Because I've locked in a profit, have I not? I've locked in a profit of $1,700 with the same amount of leverage that I had before. Well, that being the case, let me ask you this. What if instead of 10 contracts, I bought 20? How much would this trade cost me now? John wants to call. All right, I'm going to call John too. I need to break out a bigger piece of paper here to write all your numbers down on. I've got $3,000. So what is my risk in the trade? I still have no risk in the trade. Y'all, if the trade goes to zero, I'm still going to be $200 ahead. But what leverage do I have? What's happened to my leverage? What has happened to my positional leverage? To what I've got, what I started out with was 10 contracts of leverage. I now have 20 contracts of leverage, and I have no risk in the trade at this point. Y'all, if that doesn't get you excited, I mean, good grief. And this is something that, you know, it's kind of funny because I've done this. I've watched my friend Dean do it for years. And just, I mean, it was just kind of normal. It was just kind of natural. It just kind of made sense. And I started to realize that there's a lot of people who don't do this, who don't recognize, who don't understand the power of this. So Jose says, well, how do you manage the second position? So Jose, obviously, I could trade this with no stop at all and have no risk to my account. First off, let me start with that. I could do nothing on this, Jose, and I'm going to tell you that most of you would probably do better trading if you just walked away from the computer and didn't do anything. Myself included, okay, I'm not preaching. I'm just saying that, I mean, how many of you are better traders when you're not around, right? I mean, I am. I know I am. When I'm around, I tend to just screw up the trade, right? So first off, let me start with that. If I did nothing, the worst that's going to happen is I make $200 profit, right? Yes? Okay. I'm not going to do that, right? What am I going to do? I'm going to come in here. I'm going to watch this Bollinger Band squeeze play go on for probably the next 15, 20, 30, 40, 50 minutes. And then at one point or another, the stock will start to bounce and it may go higher. If it goes higher, right, if it breaks out above the upper Bollinger Band, and it starts to trade higher, and I say, let's call that 105. That happens at $105 a share. And I say to myself, look, I've got $3,000 at risk, but I really don't because I would make $200 profit. Could I put my stop all the way down here at 104? If we break out and I enter at 105 and we go all the way down to 104, how much will I lose on my option that when I buy it is effectively maybe a 55 or a 60 delta option? If the stock drops $1, I would lose about 50 cents. We'll call it 50 cents. Okay? 50 cents on 20 contracts would be how much? It'd be $1,000, right? Okay. How much did I put in the bank to begin with? So if I get stopped out there, I would end up with not $3,200 of profit. This would now become $2,200 if I got stopped out with that full dollar stop. And just looking at the charts, not likely to happen. Denise says, could you treat it as a value menu play? How about that? So Denise says, you know what? Since I'm getting in a new trade here, could I just treat this as a value menu because it is the option that is $2. It's as close to $2 as possible without going over, and it is less than $5 out of the money. Could I just put in a 30-cent stop? And the answer is yes. Yeah. I can handle this as a brand new value menu trade, and then if it goes against me, I would lose less, and my profit would be still more. What if it just takes off all afternoon and continues running higher? What's going to happen to my 104 call option? Guys, this idea, this mentality, this strategy of managing risk by rolling up the position, rolling up or rolling down the option chain if it's a put, is something that is unique to option trading and gives us a significant risk management advantage over those who trade stocks. Okay, Jordan still says 3,200 was not locked in today. 2,200 profit was high today on the 101 weekly call. So Jordan, the high price, the last trade, not the bid ask. I know that for a fact. But the high price on Apple's options at the 101 call strike. Okay. Now this is off of last trades. This is not off of bid ask. Okay, it's like call it 405, 410. Okay, that was the last trade. The bid ask was actually significantly higher than that at one point, but nobody got out at the high. And it also depends on what you paid yesterday, but assuming that we paid, what we talked about here. So Jordan, if you want to go off of real numbers, which I have no problem with, okay, you want to go off of real numbers, when I say real numbers, I'm talking about last trade. If you want to go off of last numbers, then we simply adjust this down, and so let's do this here. So now you're dealing with $2,200 of profit. If you bought 10 contracts, so let's go change all of this. You buy 10 contracts, right, and you got 220 of profit, right? Let's just say that that's what you got. So 220 of profit. If you got out and you rolled out today, okay, that's $2,200 profit, yes. Okay, 10 contracts, $150, that was a real price. We looked at that, right? So that's going to be a $1,500 purchase. What is your risk, Jordan, in this trade at this point? Zero, right? None. You are positive $700. What if you bought, I don't know, 15 contracts? Let's say you did 15 contracts, right? So 15 contracts would be right at about what? About $2,000. What's your risk now? Right? So the numbers may be a little different depending on where you bought in and where you were able to sell out. But that being the case, there still is a no risk position that is built with this windfall profit that occurs, right? And so one of my favorite ways to handle a windfall like this, when we get a trade like this, is to roll up and out, right? I mean, you can see 20 contracts right here, what we bought yesterday, we're up $3,700, right? We paid $1.89 for those, which means I could roll into a similar position at $1.50, take that $3,700 of profit that we've got, and roll that into a position that would now pose me no risk, even if okay, so your risk would be 800 if you went with which, let me ask you this, is 800 less than 1,500 or whatever it was you got in the day before, right? So you've used rolling as a way to reduce risk would be my point. Right, what'd you get in $2 to, so $1.50. So you're still getting in at less risk than the 2,000 you had at risk the day before, right? So guys, what this does is this allows you to reduce risk and potentially enhance the leverage you have to the position. So if, for example, we go in and we roll out, we buy the 104 call option on a breakout on Apple here, if Apple starts to break out, it starts to rally, we buy the 105 call option for about $1.50. We buy 15 contracts when we had 10 the day before, or we buy 20 when we had the day before, whatever the case is. If the stock gaps again tomorrow, we have twice the leverage that we did before with little less risk or potentially no risk. Denise says, when you're rolling up, do you frequently put the whole profit into the new trade? And the answer, Denise, is sometimes, right? I mean, it depends on the chart. How aggressive do I want to be on this chart? I like these breakaway gaps, especially on stocks like Apple that tend to use breakaway gaps and will have sometimes 2 to 3 gaps after that follow through. Okay? Dean, actually, 3,200 is a little low. So Dean's saying he bought a call yesterday for 73 cents. Now we're at 223. Okay, it's a triple. So again, it depends on what strike you buy and when. So guys, a couple things here. That is the Dean speaking to you at the Trader Super Summit, right? And he is the Dean of small accounts. I'm just saying, you guys need to get to the what used to be Trader Super Summit. Now just threw that whole format out, and we're now going to do the Success Symposium. And he's going to be coming out there and teaching you guys how he's doing this. And I'll tell you what, I mean, I'm pretty good at it. He's freaking awesome at it, right? And I mean, I just kind of assumed that people did this, but come to find out and going to, in fact, let me ask it here. How many of you guys do this roll out or roll up or roll down, depending on whether you have calls or puts, during the same time frame that you're in, right? So you roll from this weekly option up to another strike on the same weekly option. Congratulations, Johnny. Yannick, I went in the money yesterday because we did it as a value mini trade, right? As close to $2 as possible with a no more than $5 out of the money, right? John says sometimes. Jim says yes. So Jim, good job. Greg says, I wouldn't have thought of this as something we were supposed to do. Good to know about it. I like it. Dan says, I have not done it yet. Brenda says, would you still do the trade with the Fed getting ready to talk? So let's say I got into Apple yesterday, right? And I wake up this morning, I'm like, oh, crap, look at that. I can take my trade ahead of the Fed, and with 15 contracts, 5 more contracts going off of Jordan's numbers here, with 5 more contracts than I had yesterday, increase my leverage, reduce my risk down to where I'm going to make $200 if I'm dead wrong. And I now have a trade, a call option trade on a bullish stock related to a news-related event ahead of a major potential market-moving catalyst, and I have no risk in the trade. Are you freaking kidding me? I'm going to be all over that like a cheap suit. When do you get to do a trade ahead of the Fed for no risk? Yannick says this one is my first rollout, so I'm excited. Yeah. Tesla breaking out. Oh, yeah, they did. Nice breakout there on Tesla. We've been watching Tesla all day today. And we talked about some kind of cool stuff on Tesla. These guys were really bearish earlier, and we talked about this bottom right here, didn't we? Great. We talked right there. I mean, it was classic Bollinger Band bottoming pattern here, and we talked about that and the possibility that may create a bullish reversal in the stock. Okay. DC Jim says this was similar to the gamma play. That's exactly what it is. So all the gamma play was, Jim, was you're rolling up the chain, right? You're rolling to that one strike out of the money. One strike out of the money always has the highest gamma on any option chain. Now, the reasons for doing it were different, Jim. So when Ryan did that stuff, he did it because you were trying to capture the highest gamma. When I'm doing it, I'm trying to reduce my risk and increase my leverage. Okay? So I'm able in this example, and I'm glad somebody caught it, I'm able in this example on Apple to go in and be in essentially a risk-free position ahead of the Fed, which could be a major market-moving event, to drive this stock and others higher. Could also drive it lower, but if it drives it lower, I've got minimal risk, 0 or whatever it comes out to, depending on how much leverage I take. But I've got maximum leverage to the upside, right? I mean, that's awesome. That is awesome. Now, I'll tell you, one of the most exciting days to do this on, if you really get a stock that's moving, is on expiration day. And I was talking to the folks in the lab this morning, made them an offer for an upcoming class. I don't know if you guys have seen it on the schedule yet, but we used to do a live, on location actually, options expiration class. And I know some of you have been to that. From time to time, years ago, I had done some online options expiration classes because on expiration day, this becomes so much more powerful. You can literally roll from strike to strike as a stock is moving and be picking up the same delta for less money. So you can enhance tremendously your leverage in a position and build a massive position with little to no risk in the trade if you're able to roll forward on this. It's one of the things I'm going to be talking about. What I'm talking about, guys, is a live online class. For those of you that are like, Bill, I like online classes because I can't travel that much. So we've got a live online class coming up right here. We got some logos and stuff being made for it right now called Terminal Velocity. Guys, this is going to be an all-day class with me trading the options expiration from an hour before market open so I can teach some strategies all the way through to the close. We're going to trade the open. We're going to look for some of the craziness that goes on there. We're going to trade the middle of the day when volatility dies off and we're able to sell premium. We're going to look for credit spreads. We're going to look for strangles. We're going to look for directional trades. We're going to dive deep into the charting. We're even going to look at some of the strategies that Marquet teaches. I've got a message from Marquet, guys. She wasn't able to be here. Had an appointment that showed up last minute. Opportunity, something that she's been trying to get done and needed to get done. So she called and texted me and asked me to give you guys her best. And I'm going to see if I can't get Marquet to come in and spend a little bit of time in the terminal velocity class, just kind of see what her view of the market is and whatnot. But this is going to be an options expiration specific class that is going on. Yes, I am, John. Options expiration specific class called terminal velocity. We're going to spend the whole day together. I'm probably going to take about 30, 45 minutes for lunch, all right? And from time to time, I might, come over here and turn on the camera so you guys can see in the middle of the day, right? This is what I'm going to look like. All right, and I'll talk to you some, but there's not a lot going on, right? So we'll talk about some of the strategies that we do in the middle of the day. Yeah, normal day, exactly, Scott. You're a funny guy. So Ed says, on expiration day, I ended up 12 cents in the money, and they booted me out of the position. Yeah, Ed, here's the thing. And I'm going to talk about some of the things to consider, especially with a smaller account, on options expiration day and ways to build out strategies that will keep you from getting booted out. Okay? Brenda says I need that chair. It is quite comfortable, I guess. All right, so guys, that is what we got going on. The Success Symposium. Get to this event, guys. I'm actually going to do a couple of promotions. We're going to have some of the coaches come in and do some promotions. Tell you a little bit about some of the people that are going to be coming out to that. I told you guys a motivational, inspirational speaker that is going to be coming. And I'll tell you, the thing that's remarkable about him is he's not a motivational speaker per se yet. And I've been working with him because I want him to become one. He has such an amazing story to tell. If you've ever felt like you want to quit, this guy is going to make you feel like you never want to quit. We've got some really cool stuff coming from some other instructors, outside instructors. It's going to be phenomenal, and take advantage of it. Mike says already registered. Want to see what all the nice stuff is you're talking about. Is there a way to attend the Success Symposium remotely or watch it afterwards if we can't fly out in person? Right now, Greg, no. But that doesn't mean that that's not something we've looked at. Well, one of the problems that we've got with being able to do a live webinar on location is that we do these in places that, well, hotels that typically have horrible internet, and so for that reason, really difficult for us to get that out there, and it just looks like crap. Okay. Denise says, will he be in Vegas in October? I don't know if we'll be in Vegas in October. I know I will be in Vegas in April. I mean, I'm just saying. Let's see here. Philip asking a question. Bill, is this the same Dean from Marquet's Trader Talk that said that the Phoenix project and the DVDs that Marquet did there was a major turning point for him? What changed via the Phoenix project? So, Philip, what I'm going to tell you is, yes, it's the same Dean, and make sure you get out to Vegas to, get out to Orlando to find out, right? Find out. Joseph says, thank you very much for your teaching today. Well, absolutely, Joseph. I appreciate the opportunity to do it. Like I said, I talked to Marquez. She wanted to be here with you guys, watching a little bit of maybe a quick little day trade here on Apple. It's a counter trend trade. Volume picked up a little bit, and they may be pushing. So if you look at a little faster Bollinger Band, you're actually touching that that outer band, and you may get a bounce here. This is a place where a lot of what Marquez teaches comes into play, including, for example, trading in multiple time frames, looking at a 1 minute chart. And when you look at this 1 minute chart, and this is something that I just kind of pulled up here, but you see the volume spike, but a lot of that volume has occurred right here on this wick. So I need to see, are we going to continue to push lower? And if we are, and we're starting to get some good volume, this could be a fun little day trade. Just kind of going the other way, opportunity to make a little bit of extra money. Now I'm watching, and it still looks to me like there are buyers that are wanting to come in here. Yeah, there are. So really important to watch things here, guys, like the 1 minute chart when you start to see these breakdowns and know how to time that. This is one of the things that Marquez talked about in that DVD set. And let's see, I got 6, 7, 8 of you that are going to be getting phone calls today from me about that DVD set. Okay. So kind of some cool stuff there. Now the stock's starting to break down a little bit, so I can start looking at taking a put option position here. Because it's going to be a day trade, I'm going to go in the money with this. I can pick the 106 put option here. I can pick up some contracts on that, and I can just kind of stay with this and see how those work out. It is a momentum move, right? These are all things, again, if you don't have the DVD set that Marquez just put out, or you don't have her trend trading DVD, or you don't have her technically speaking DVD, you need to freaking get it, right? And that's coming from somebody who has their own DVD set, so that should tell you something about how much I support what she's doing. Do I ever incorporate extended hours price action into my trading? No, I never do, Jordan. And there's a couple reasons for it, one of which is that I follow and am friends with a number of professional traders, and I go to workshops and get mentoring as well. And after hours and before hours trading is so thinly traded by such a massive group of, well, it's not even a massive group, a small group of massive traders, right? Bank of America, Goldman Sachs, UBS, night trading. These guys are moving huge blocks of what appears to be huge blocks of stock, but they're doing it in a thinly traded market. It really has no relevance to what else is going on in the markets and what else is happening with our trades, right? So we're up $80 already. Check that out. Brenda says, glad to be here today, and I look forward to your call. So let's see here. I can make sure I got Brenda on there. All right. So Brenda, I got to make sure I got you on there. It could, Joe, and I don't know where it's going to close. I mean, we'll keep an eye on it and see. The fact is, it's still bullish, and let's just talk about that. So, we got out of our call options. We're like, oh, good timing on getting out of the call options. Guys, Apple is still bullish all the way to today's opening price, and I would say today's low price. If it breaks down into that gap, it's still bullish, but maybe we wait for a retracement to the 5 moving average, right? Yeah, stick to your peers as retail traders, right, Jordan? That would be a good way to put it. A gap fill would be good. Yeah, there's a nice gap there to be filled. So, guys, kind of some cool stuff going on, some cool opportunities. I am going to be reaching out, making some phone calls to some of you who have asked for the calls. I'll give you a call here this afternoon. I am going to go eat lunch because I'm about to pass out. Right? I mean, I would show you the camera of it, but it's not a pretty picture. So come on in, and we'll talk this afternoon. I'll get you guys taken care of on that, and get you guys some of the special offers that we're making on Marquet's DVD set. We got some others coming out, and if you're interested in being put on our call list for some of the other things that will be coming out in the future, let me know that. For the rest of you guys, I appreciate the opportunity to hang out. Appreciate the opportunity to do a little bit of teaching. And, normally, like I said, Marquet and I teach this class together. She asked me if I could cover for her. She had an appointment that she was looking at something that was going out till June was the first chance that she would have. And an appointment opened up today, so she called me up like all frantic, and I was like, well, go do what you need to do. That's what teamwork's all about, right? So I think I can handle it. And I will, Joseph, and of course you guys will see her next week and Unplugged as well. Philip, let's see. Philip wants to call too. All right, hang on out there, Philip. Let me get that. And anyone else? I mean, speak now or forever hold your peace until next week. All right. Yeah, you'll see her in the Trader Talk, right, Dean? There you go. Yes, Scott, one way or another, we're going to make that happen, all right, because we got a bunch of new people coming into Unplugged. So what we'll probably do is we'll do the Unplugged live from Phoenix. Check that. What, you didn't think we could do that? I mean, we're pretty talented over here. Ladies and gentlemen, we have come to the end of our time together. It's been a great opportunity to talk about some cool stuff and some of the strategies. Guys, play around with and practice with that idea of rolling your options as a risk management technique. Okay, I mean, anytime you can take a trade that has risk in it and convert it to a risk-free trade relative to your total account value, that's a win-win all the way around. Great stuff there. Learn to do that. And then those of you who are interested in learning to trade the options expiration, which quite frankly is the one day if they took everything else away from me, I'd be like, okay, just let me trade on Friday and I'll be fine, would be the one day that I do. Okay? All right, very good. Robert, I look forward to seeing you in Florida and the rest of you guys as well. Apple continue to break down there, loving it. Let's just go take a peek just because I'm curious. Yeah, we're about the same place, right? About $100, right? So, I mean, that buys lunch, right? There you go. All right, ladies and gentlemen, truly an honor and a privilege to hang out with you guys. Look forward to doing it again in the very near future. I want to see you guys in some of our live classes that are coming up. I want to see you guys being involved with us. Get on the new website, check out some of the cool stuff there, and get your friends to go there. We have redesigned the homepage specifically for new students who are interested in enhancing their trading career. Ladies and gentlemen, let's see. No, Bill. So Bill asking an important. Attila, how are you, man? What's going on? Bill asking a question here. He says, is it better to roll a position than it is to hedge by selling a higher strike price? You know, I would say if you've got profit in the position and the profit is enough that you can increase or maintain the same leverage but reduce or eliminate risk, then yes. If you have a trade that's kind of going against you or it's gone flat and you're not at a place where it's got enough profit in there to do that, then hedging by shorting an out-of-the-money option is a better strategy, right? So kind of, Bill asked that in the lab, and we'll go through and I'll actually draw that out side by side so you can see the difference. There's the, let me leave you guys with this right here. Bam, right there. There it is. All right. So, just a little reminder, every day, ladies and gentlemen, every day, an opportunity. All right. That's all I got for you. I seriously am about to pass out from lack of food because I've been teaching all morning here. And I'm going to go get a bite to eat, and then I'm going to make some phone calls. I appreciate the opportunity to hang out with you guys. Look forward to doing it again in the very near future. Until then, I wish all of you all the success in the world. Godspeed, God bless, and we will talk to you guys in the near future.